Got two trades that I would like to go through. The gold breakout we had at 8 a.m. the other morning, very quick, 250 tick, like blippers, if you say. So I want to look at the technical structure of that, and also sort of the Bund drift breakout. I call it a breakout because it wasn't really messy and choppy. Like, it was more of like a drift that sort of drifted away. And just some key takeaways, mainly, just learning from what I've noticed in these two types of trades, and a lot of things that I'm trying to work on. Is one specific thing that I'll explain what I'm trying to work on, mainly on the execution part of sort of both of these, where your best sort of like risk reward is on these lower time frame type of moves, where what you've got the bigger time frame play, but how then do you access it in the best possible way? And mainly that's what I'm trying to focus on, sort of mainly this year, and develop that, because you notice when I've been in trades, my average price can change quite a lot, and I don't really want to do it that much, because I can have the right technical play, but I'm not great at accessing it in the best prices. So that's mainly where the main focus is for me, like on this year. But I wanted to go through on the other note of both of these trades, of just how it works, or just what I'm looking at. So I'll do a little description, quite bland and quite, boring, shall we say, but it's the best sort of way that I would define a trade. But I'm going to go through each of the pictures that, I'll annotate, etc. And where you get the idea from, because I annotate all these in the best possible way I can. It might be pretty basic, but it's what I like to look for. And so basically we start off with, sometimes these are all modelled up. Right, we start off with this sort of hourly structure that we've got up here. So what you've got is this sort of point up here where we've broken out from, and this is very similar to the 8th of August, I believe, in 2020, the same similar structure, hence why I thought there could have been a massive move down. I'll try and get that up for you in a moment. I'll drag the other chart up and I'll be able to show the equivalent to what this will look like, and then the big down move that you happened on this day, which we did eventually get. But mainly the main trade of this day, what I was looking at was, you've got this offer, and then you've got the little sideways sort of range we've got here, this sort of pullback and drift lower. So anything really that, for me at this point, was this candle, and we've got this big long trend line as well. So the break of this, and then I was looking for this key low to break on this trend line, and we should go all the way through this little tight box that we've got here, which coincides with sort of like this volume piece over here, I believe. No, not that piece. A bit higher up, sorry. Yeah. A bit further back. But coming into then, this is what I mean. So this profile here, you've got very tight, trades. You haven't really got, you've got a little bit of a tail down here, which isn't so bad, but the main sort of aspect of the trade is that this, once you get through here, you should be able to sweep through this little bulky pocket that we've got of volume, or this little tight value area. As you can see, they are very tight. You should be able to sweep all the way through, and you target basically the bottom, because you get these like nice little tight profiles where the volume's already traded, so therefore nobody needs to really trade, and hence why you get the break all the way through. We sort of like call it a little bit of like a block profile, or like a fridge or something like that, because it's like the same as a block. So you've got that big quick move that you do get. You've got that inside day as well, which stabs and drifts, or doesn't really do much through it. And then come 8 o'clock, you get the break. I wasn't expecting a massive move like this. I mean, I was sitting there, and again, this goes into what I say from the key takeaways at the end, is the price action wasn't that great, but you have to ignore that and stick to the technical structure of what's going on and what can build into that. The way the trade is basically. So that is sort of the main picture. I had the belief that it could go all the way back down. This was a great sell on the second side, but I mainly focus on the first move. So that's my original picture of what I felt like the trade could do. So we've got, this is the 5 minute of it. So you've got this sort of drift down overnight, which isn't really great, but you get a lot of, like, again, it's sort of like the bulky bottoms, or it's tested multiple times. I call it like a bulky bottom, or like a chunky bottom, really, because you haven't got no tail. You've got trade that is just chopping on the level, should we say. So any sort of like trade really through this point, you then can look to get short. You have a little pullback, but we're going to the 1 minute time frame, and this is mainly where to develop a bigger edge in this year is to get involved in these really tight areas where your risk reward is, you know, so much in your favor, but you know, it's, yeah, that's what I mean by it. It's so much in your favor where you feel like you are wrong if it starts to trade and you do take a loss. But it's sort of understanding where can you get in where your risk reward is in your favor, and it's not necessarily like we say here, selling up in this little box up here and noticing a change isn't really the high, you know, it's a great risk reward. You're selling in your, you know, 50 ticks on the side before you break the day's low, but it's more of sort of, you're not right up there yet, should we say. You're not right. This could easily bounce. You're not looking to break. You haven't got that trade where you're looking then to break. So it's really, once you get through here, there's a little chance that you could sell. This one, maybe you have a chance in this little sideways box here. You know, these, like I say here, you can chances to commit to the trade. This is a little passive entry. Whereas this little sideways bit here, I feel like that's probably your best risk reward, because as soon as you break through here and you break this point, you have a good chance that you can test that level below, as we expect up here as we go up. So this is where you are trading before. So once you get through here, this little, you know, currently the poor daily bottom that we got, where the overnight has traded, once you get out of here, you should really be testing this low. You know, there's no tail. You should be testing it. So the price of that low, it does go before it even reaches it anyway. So you wouldn't have the chance to sell it. So it's sort of like 19.035s. So that's like about here. So you've got sort of 40 ticks in between, whereas soon this low goes where you've got that bulky bottom, because there's something I really like. As soon as you get through here, you're pretty right that you should be testing, and you should break this overnight low and should be down to trading this point here. Okay, it goes and blips before, but this is where you can look to get some kind of access here, where here you sort of hold the bottom of this little area here. This is where you sort of go into more detail and that deeper thinking of how do you access the trade, because it's very easy, not easy, but it's very obvious sometimes to look at in chart. It can break here, it can break there, you know, and you can create structure. But for me, this is what I struggle with, is to define where you're really in the zone and in the right mindset to access this trade. You really thought deeply about it, and you don't know how it's necessarily going to come about, because it could just straight line all the way through, and that's where I struggle. Where's your sort of access? But it's these little tiny little 1 minute, 5 minute sort of structures where you look to get short, and if you tell yourself once you're through this low, you should be then at least testing these 19.03.5. You know, okay, you're trading before 8 o'clock, but that 8 o'clock gives you that, and you know, the delta starts to come off, and it's quite aggressive. That bit of delta that comes down sort of in this candle here gives you a bit of an inkling that, okay, there is some selling here, which there definitely was. And I'll be able to show you that in the footprint here, where that's the pullback. There's a possible entry there, because you've got this volume over here, if you can see my mouse, on the left side, you've got this volume here, and we sort of hold that. So where those absorption of some buyers were, the sellers have then taken over, and then you've come down and you've broken through, and especially here you get 148 over the 8, so you've definitely got some big sellers coming in. You know, you get 200 and 256 over the 7. So I did remember watching this, that it came down, and it's one of the gold trades where the price action's not great, but it does actually happen. The trade happens in it, and it sort of blips, etc. Where that's where you've got to trust it, because you've got that really small time frame in this area, which is where we're talking. So this is the 58, sort of in the 60s, which is just actually above here. So that's more in this area where, you know, this bit's a little bit harder to get it. If you're trusting not the footprint, but you're trusting your structure and you're watching price action, you can get involved in here, and maybe you can leverage up a little bit lower down, you know, because we're talking about in this area here is where that little sideways pullback is, or yeah, so around this area. But this point here is where you feel like, yeah, I'm really right now. We've broken the day's overnight low, we've got some selling. Delta's very negative obviously in the end of this rotation, but as you can see, you set off loads of stops, and these little ones here, you know, that's all the same second along the bottom, 821. So that's where again you can commit below in this pocket as well, where you've got that big selling. As long as that selling then holds, you have got some good risk reward in this trade, because you're in before the level as well. But then it's a comparison of putting the two together, like this little box here, these little 1 minute sideways. You know, the footprint doesn't necessarily show you anything in here. It's more of this bit where it comes down and you get that bigger rotation. So it's more of this area. But as soon as you get to this area, it really does change, and you can see the difference between this pocket and this. You know, you've got -1 in the delta, and you've got so much more selling in this area. You've got 2,000 nearly volume compared to the 4,000, which a lot of that will be done in this first piece, because it just sets off a lot of stops. So what I'm trying to say is that, just for me personally, looking at these areas of access and just remembering on how you map the trade, and you map how you can execute and what you want to be seeing, and you get in these little structures, that's where you want to dive in to where you want to develop your edge on these bigger time frame plays, especially for me, the way I see the market, etc. So you add all these things up where, you know, if this is a massive tail, it would, so I'd still think of it same, but maybe a bit less conviction. You know, you've got a nice tail where you're going to get more, it's more of a buying tail. You know, you got to move down and you're getting a very quick move back up, where you're sort of staying down here. The value shifted as well on this cash move, and this is the other. Yeah, I think that's the way I have it. Yeah, pink. Yeah. So that's how you then got to, you know, judge it, and you tell yourself you want to then commit. You're going to commit, and you're going to feel much happier with the way you executed the trade, even if you know, took a loss or something like that. It's worth then going back. Again, you've got this little sideways area. You spend some time there overnight. As soon as you break through, you know, you should then be trading down here, and you've got such a tight risk reward. And even in either of these places, I mean, in here you might be able to get something, and then you can actually commit a bit more in this zone, just above here, and just above this price at 60s, and then you get that move. It's just that real high conviction that you've seen these types of plays before, and that's exactly what you get. You get a very quick move. Okay, you're probably actually gonna not get. I can't remember how far this did go in the end. Yeah, you were probably if you hit after this, because I watched it, you probably wasn't getting out in this bit. You might have had to give up 100 ticks, which, you know, is a shame. But you're still taking pretty much nearly 200 ticks out of this like 300 tick possible move that you could have taken. You know, but that's like the gold. The way you just want to define it, and you go into more detail on the smaller structured like time frame, that's especially where you can then really take much more of an advantage, and you've got then that bigger time frame playing then comes into a massive edge on in the smaller time frame moments, etc. And it all depends on a lot of different types of breakout trades, especially the Bund. This one, is slightly a bit more different, you know, because it's the Bund and it's a different momentum type. The price action's much harder. So again, this is just the 1 hour chart. I do have the dailies. I think I even put the weekly up for this because you've got so much time spent here. You know, I thought personally that how much time you've actually got spent here, that this would be much more of a significant break. So again, this is the daily chart of what you've got. So look how much trade you've got here. Like I say, you've got back up to sort of November. This range comes into play. Just after this drop, this range comes into play. So this is what you're looking at, and how then you can just be patient and wait for this to then look to break one way. I know we're trading back up here now, but you're looking for the different sort of change that, and again, this goes down to mapping, and I say watching the price action, because this gate can give you the more conviction that I believe I was short on this day here into this area, and the price action you got at these sort of 20s to 24s in here was the key point. Not necessarily the 16s that you generate here, or this, sorry, that's the 16s, these lows here. It's more of different prices can mean sort of different things. You can watch and you can see a certain price has built a significant amount of volume and the price can't get through there. So what I'm saying in here is this is the more key zone around these 20s to 24s. Before then you can break the 16s, and then you've got the 3 daily lows, and you should then be trading, I think it was 80s and then 70s. So I've done that mapping of the previous days where you've got that certain significant price point where that can influence the bigger move, as I'll explain a bit here. So in this zone here, you've got, each one of these days is an all sessions one. And what you've got here is you've got these 16s. You've basically got a double inside day. You've got these 16s here. Really, the price that you want to play the breakthrough is in between 20s and 24s in this area. You can see the volume was created the day before here. You see the VPOC's nearly at this point. So that's the 24s. That's where I was short on, might have been an ISM, I believe, into this area, looking for the bigger time frame play. Again, you've got more of a bit of a buying tail here, so that can be a bit make a difference, because if you've got a bottom like this down here, you're going to have much higher conviction. It's just, again, this is something I'm trying to work on understanding the profiles at tops and bottoms and what generates goods and bads and how you can generate reversals more than just playing the breakout. But that's another thing to develop for me this year on understanding the tops and bottoms. So really, like I put here, the key price is the 24s. So once then you trade through the 24s and the 20s, if you've got a nice flow, you then should be trading 16s. And if you break the 16s, that should then generate the move all the way down to these 3 lows, which then to me you should break, and you should then be trading down at the 80s if everything's all in line. So then you've got the weekly profile where you've got a bad low previously, pretty much a 3 TPO low. You've got this sort of massive volume point here. You've got a lot of tight volume, and you're just creating this sort of big ledge. I know it's scrunched up, but you can see that you're just creating this volume point at just above the 20s. Whereas again, for me, it adds up to the volumes being traded at that price. You've got people absorbing that zone. Whereas as soon as that breaks, you should then see continuation. And ideally, that's what the ledge is where people are just absorbing that sort of price, etc. And you're just building TPOs, etc. So that's where I feel like once you get through this, you should really be testing down here. You've sort of got like a double weekly low again around these days, or 3 daily lows. So that's where you're adding those different days into factor, or into the equation, should we say. So again, you've got those 24s here. These are all split, so these are pretty much ideally all in blue and purple are the cash sessions, where the overnight are the really tiny small ones. So you've got the 24s and the 20s here, and again you've actually got an inside day of cash, as you can see in the boxes. So you get a little initial balance, can't break out. You've sort of gone through it by a couple of ticks, as I say here, and then you've come down, and then now you're looking for the test of sort of around these 20s to 24s. how we get that sort of area and how can you get involved in this. And you got open down here and you got the inside day. So you got a failed inside day. Now can we break the other side? So sometimes you get those plays where you get the move up, fails, and then comes back and you break through the bottom. You know, I felt like this was quite a nice tail. You got the low volume like you want to see, reverse, great. But again, the way that I explained it, the break of these 20s to 24s gives you the conviction. Then you should really want to be trading these sort of two bottoms and play the inside day break from that point. And then you want to be holding it down to 3 key lows, and then you've got the 80s and these two. Again, the trade, another thing is that the trade didn't work out all in one day. It took basically the overnight session, but you probably would have given up in here. I know value shifted, but you probably would have given up in here, you know, if you're not going to hold, if you're a trader that doesn't hold things overnight, which, you know, I personally wouldn't currently anyway, until, you know, you're giving up a lot of ticks, because that could easily be trading, you know, another 20 ticks higher, and, you know, it's pointless really for that risk reward after you've pretty much held all day. So moving on into sort of these other sort of time frame plays, not time frame plays, but these access areas where I thought you had good risk reward. And this is again something I'm still really trying to work on, where you really want to get in just that one zone and not add into it really afterwards. Sometimes you may have to, because, you know, you're working in the position, different ways of execution, but this is what I sort of felt. This is the 5-minute chart of how the trade worked, and it does put you under a little bit of pressure in this little nasty little China comment that you got, but which got reversed very quickly. But I'll come into that, and what you get is, so up here, you've got this little sideways range where you're just creating that sort of ledge to the top side, and after you've created that low, you've bounced, you're just creating this, you fell to the upside again, sorry, on the inside day, you've come down, you bounce, and you sort of come back, and you sort of just literally hover sideways. And I'll quickly go to the footprint, where this is what the footprint generated. You got nearly 39, basically 40,000 contracts just sat here. Whereas you can have quite tight risk here, I think, because I think you can sell the 44s and 43s, which give you these 2 points here, and you trade them a lot. You can have some tight risk with your stop above here. I think that's quite fair. Okay, you're not necessarily correct yet, but you can get some tight risk reward on a pullback to then play this move. So that's what you've got. And then you sort of sit sideways for a while. You have to be very patient, especially with the Bund. I don't think it necessarily changes price action too much. But you just have to really focus. And this is where the price action doesn't always determine the trade necessarily, as the technical's right, but the price action makes it hard. And that's when, you're not seeing the momentum, you're not seeing, you know, high volume, or however you want to describe a breakout. But not all breakouts, they can just be steady. So this is why I called it a drift, because I sat there and pretty much watched the whole of this and trying to understand that if you're technically right, then there's no reason why you should be getting out, because it comes down to, it's doing what you think it should be. It's the market's going where it should be going. It's obviously, you're right. You could understand if it traded and then it didn't want to go, you'd be able to, in the price action, probably see why. But you could, you know, there's all these. This is why rewatching ladders is very good. So you get this little pullback, and the difference between here and here is what I've circled, is this pullback here, you know, very lack of volume, as I put here. You know, it doesn't break the offers that we've got. I mean, it offers another chance to get in another short, because if the volume's much higher than this at this point, you're probably thinking, okay, this trade's not really on. This is something I noticed after when I was doing this. I looked down to see what the delta was like, and, you know, you got more volume here, which gives you the point of execution of, you know, you're watching it and it's creating that ledge point. Whereas this pullback's quite a quick reversal, because the volume's very lackluster. It's not changing from this circle point up here. So from here, you've got a few higher volume candles where it could break back up, and this hasn't. So it'd be very questionable if you've got a low volume push back up, because it's not really any buyers. It's just sort of a drift away. Whereas I would say this is a good short to come back here, and you got a nice tight risk reward, and you get the offer down. And it's again, this is where your 5 minute sort of patterns and understanding come into it, because I think as soon as you break this low here, which is the 31s, and you do get a bigger candle, you know, volume shifts a little bit just after here, just after at this point, the volume picks up a little bit, and that breaks, and then it gives you the chance, I feel, if you haven't already, you've got this little bar in here. As long as you stay below the 31s and that violent move down, the more violent, bit more volatile, I think there's your little bit tighter risk reward in this zone. I do think as well, as you're shifting down to these 20s to 24s, you had the chance again after this move, because it's just putting all the factors into the situation of how you look to play the break. And we go down a little bit more into the sort of 1 minute time frame. Again, these little sideways pockets, these little sideways areas you can get in, the little pullback. You know, it's just me. I don't know if I sound that I've got loads of high conviction of it, but I'm trying to work on looking into it in a bit more of the aspect of where are the good risk reward opportunities, because I can sell and I look at price action too much. And if I tell myself about the chart, you can then, I think, you feel like the price action that you're going to see will help you by you staying in these trades, because it is nasty. Because when I was watching it, is you get in this little tight area in here, which I think is good risk reward. I think you can then probably get involved in this because you're then breaking below the 31s. It's all going into this sort of then deeper 1 and 5 minute execution where you look at it and you go, okay, wow, and ignoring the price action. Because these breaks, especially, which one was this? It might have been this one here. I'll explain. But the breaks were actually quite nice. They were breaking six ticks, etc. on the lows. And you go, okay, that's good. You want to see that hold. You want to see that momentum just keep going and going and going. But it doesn't do that. It was just pulling back, and then it would just take it back down again. As you can see, it would just pull back, go back down, pull back, go back down, little pullback here, and then this move here, I thought, okay, that looks good. You broke all 3 lows in a nice fashion, and you just get this real big push. And I was watching it going, you know, if I was short now, I would have knowing me myself and the way I panic sometimes, I'd have got out of that 100% probably, covered something. And you sit there and you go, it's actually come back down. I know you're looking at this point and you're going near the end of the day, but this is 2 o'clock, so that's probably okay. You know, just around the open time of the US. But as you're coming more into the latter of the day, you probably give up on this trade going into the 4 o'clock. But just trying to say is that these little pullbacks can really, they can make you suffer, but if you're not in the right mindset of understanding what the trade's doing. Because if you've noticed after this it happens and then this and this happens, you're not wrong yet until you start trading back up to really the 31s and you go back inside if you false break the day's low. Because then your trade ideas are not really valid. You know, because it can be a very hard trade. If it breaks here, pulls back, and it goes down and it pulls back, it's just a nasty trade then. But you're not wrong yet if you put your stop there, here. You know, you're in capable hands of what the trade's going to do. So it's just understanding that, just let the trades flow. And if you've got a pinpoint of how you want to execute, which is I'm really trying to do this year, is just execute in the right manner and be consistent with it, then you should be able to see some better results. Because trying to sell and sell a low, you're probably going to puke that point, sell a low, puke that point. But you just have to then, you know, trust yourself. That's what I go wrong. But if I quickly, in this little box here, as I've put here, I feel like this little zone here is a good chance to be short. In this little 1 minute sideways, you have a good chance. I feel like if you start trading back above 31s, you know, you're probably a little bit worrying a bit, because you get a nice little pickup in volume here and it breaks. This bit in here I think's fine. I was saying to myself, you can be short here. You know, you're in the zone where, I know you're in the zone between 20s and 24s, you know, you're trading 25s, 26, but if the price action is right and we can trade through, I think that's fine. You do get this little China comment which pops this up, but it got very quickly sold back down. And that shows that the sellers are definitely, to me, involved. And then you really can put your stop above here. And then you just let the trade go. Okay, this bit's not nice, but if you're sticking to that one point of sort of execution where you're being consistent with it, you're not going to be phased by this, because you're only going to be phased by this little pullback if you're selling more or more on this little nice break. You're not going to be put in trouble if you're just selling in this. Even if you sold here, you're going to come back to your average price and your stops up here. So I think, you know, you've got good risk reward even if you're selling the 25s. You know, you can take 30 ticks out of the bund. I think you'll be pretty pleased, because obviously it's a much thicker market. It's not going to go as far. But that's the way I'm really trying to look at it. And then coming down again into the footprint, you got the low here of these 31s. You get a nice clean break. You leave some low one, you got a nice clean break. Again, it's just exactly what you want to see when you're trying to then define on how you can access trades. Again, the lack of volume on this pullback. Look at that pullback. This range up here, 8,500 compared to the 39,000. The difference in, you know, these pullbacks, that can just add the more conviction on this little pullback that the volume hasn't been, you know, it's not there. But that's sort of it really. It's just trying to then define, and you talk yourself into these trades and just keep mapping, because I know everybody trades completely different. People might disagree with what I say, but it's just on how I'm trying to develop myself better, and how I just see the market, and hopefully it helps. And you know, these little smaller things that I'm trying to work on can help you guys also. But you know, just trying to really work on this year and understanding, and it's all for me about, you know, trusting, you know, that I'm seeing things correctly, especially in the smaller time frame compared to the bigger time frame. I can see this much clear, the bigger time frame much clearer than I can see the smaller time frame. But I'll get into the last little point, some key takeaways. So the last little point is understanding where your clear access points are and how you want to access the trade. This comes again from the planning and the deep detail that you put into it, and it's only going to add and build your conviction on the trade. I think that's a very key point. Something that me and Eric are definitely working on this year is, you know, you deep detail your trade and how you want to execute it. You know, it's only going to build you and add conviction to the trade, and you're going to feel much more comfortable when you are executing it and you're telling yourself the right information. And again, understanding these 1 and 5 minute execution patterns, because you could be selling a low, but why are you selling a low? Because it's the low and it should be breaking. It's not really, for me, enough. And I've done that multiple times. You know, sometimes I still do it, and you think it's very stupid. But if you can find these little tiny patterns, great. You know, they're gonna put these 1 5 minute into that deep detail, and then you can look to access the trade, and you compare it with the footprint. If everything lines up, you know, happy days, the trade looks to be good, and you can add the conviction, you can add more size to these trades. Again, finding ways to keep yourself in the trade, especially like the Bund one. It was slow price action. It definitely changed at times. It did break a bit violent at times, like I said, 6 or 7 ticks, but it did always bounce. And the way it goes down quickly and it bounces, but as long as then the bounce is not enough and it's keeping you in the trade, and it comes back down and it makes a new low, you can accept that that's the price action that it's going to give you. Is doing this sort of, I'll bounce a bit and I'll just break a little bit more, and I'll bounce a bit. It's just like the momentum's not there. It's more of, I'm going to passively sell this, and buyers are going to passively pick it up, but the sellers are stronger. And again, this is a big one, I think, for me especially, and this comes from sort of mine and Eric's conversation, is take the emotion of, I don't like the price action, away, and you then must trust the more technical picture. As if your footprint's showing you the right thing, your technical picture's showing you the right thing, you can compare them together, your little 1 minute patterns, you can then trust it, because especially with that gold move, you've got the footprint, you've got this footprint, you know, it should be lighting up, it should be really lighting up your eyes, even if you've missed that 1 minute time frame. I still think once you see this, as long as that doesn't come back through, I think the trade's really on. And this is what something for me personally, I have to sit there and go, this trade's now on, you have to now commit. And it does give you that massive risk reward in the end. So me saying this is exactly what I said when I watched the price action before 8 o'clock. I don't like it. So you step away and you watch it and you go, okay, and it's just giving you 300 ticks, and you sit there and go, well, didn't like it. I mean, it's not really good enough excuse for, me personally. I don't think it's good enough. You should just be, okay, it's not doing what you want it to do, but is there anything else that you can put into it and say, okay, this trade is still valid to be taking, even though the price action doesn't look great? I think there's ways to look at it, especially in that format. Yes, again, it comes into, if you don't like the price action, in case it might be the first time you've seen it trade in that way, which I've seen gold trade in these little I don't like these icebergs that come in, especially because they don't trade through them, but this one did, especially very big. But I don't like trading into them. I don't want to sell a low because I know something's there. But then you shouldn't really be selling the low anyway, unless that type of trade is valid to take. And it can scare you out because gold can then come back 15 ticks and then go again. But this, I don't like price action, can turn into I like this price action very much in these future trades, etc. And that's really something key that you can take away from it, especially. But that's it from me. I hope that's quite detailed. I think of a good way to look at your trades afterwards, and especially watch your ladders back. I think that's a very big help, because when I do the streams and I watch mine back, when I explain to you guys, I always find new things.
If you find this video interesting, if you want to go deep into the AXIA training method and how our trading team of 7-figure traders develop setups and strategies, and how they learn to build the most profitable trades across all market environments, then join me in this workshop. Now, in this workshop, you're going to learn 3 powerful steps we use to train all our traders on both our London and our Poland trading desks to help build incredible levels of consistency. How to predictably understand which setups work and which don't. You're going to learn our 2 main strategies for how we perfect our trade timing before we enter every single trade. You're going to learn the VEL concept, which is our one and only technique we use to leverage our largest trades. You'll also learn how to avoid trading setups that don't work, how to avoid those large losses, and our main method we use to identify them that saves our traders significant amounts of capital. Finally, you will learn how our traders use the power of network learning to find market patterns quicker than ever before, so you shortcut that learning curve. In the workshop, we want to program your awareness of elite performance, to program your ability to choose the right setups, and program your ability to be a consistent trader. So the trades that you execute become more simple and clearer. And I can tell you this, you'll never see the markets the same again. You'll never look at the markets with a narrow view of getting lost in all the noise and confusion. You'll take your first step towards a deep edge market awareness. I cannot wait for you to join me in this workshop. And I think you're in for a massive paradigm shift in your understanding of how to develop as a trader. So join me by clicking on the top right-hand corner of the screen and sign up for this powerful training workshop, or visit elitetraderworkshop.com.